GDP and consumer confidence are out this Tuesday, and gold prices have pushed modestly above unchanged. Joining us now is Peter Hug. Peter, good to see you again.
Nice to see you, Daniela.
Peter, this Tuesday morning, we're seeing gold trying hard to breach past the $1,200 level. Also, in your commentary, you say that the markets are looking nervous. How is gold looking to you right now, Peter?
Yeah, I mean, if you look at the overall macro picture, I'm still in the camp of a stronger dollar, and which will create some headwinds for gold. But in this short term, by short term I mean over the next few days, especially with the Thanksgiving holiday and the Swiss gold referendum on Sunday, I think the market is very hesitant to be aggressively short, but it's having trouble getting through that $1,200 level. So it's been trading in a very tight range. The 1192, 1205 range has sort of been on the charts for about 3 days now. There seems to be good bids just under this level right now. So I suspect, the risk to the market might be to the upside in the very short term until we get some of these news items out of the way by early next week.
Now, Peter, we had two important economic data points come out this Tuesday: GDP and consumer confidence. GDP in numbers rising to 3.9%, better than expected. Now, although this data is backward looking, do you think this is a true reflection of the state of the U.S. economy?
Yes, I do, actually. I think the first quarter was... it could have been weather related, but it was obviously a very dismal quarter, which is going to drive down the average for 2014. But I think we're in the area of 3.4% GDP growth, taking out that first quarter going forward. So, I like that number today, and I think it's a real number. There may be a small downward revision when we see by the time fourth quarter comes out. On third quarter, but I think it's reflective of where the economy is right now.
Also, Peter, consumer confidence came out this morning, falling to 88.7 in November. Do you think that consumer confidence and GDP having any impact on gold right now?
That's a month by month number. One month it's better than the other. I don't put a lot of faith behind consumer confidence numbers on a monthly basis. I think if you sort of blend the index over the past 3 or 4 months, I still think it's very healthy. I think consumers are relatively comfortable, and we'll see with the holiday sales. But I suspect the holiday sales, may be all right this year. I found something very interesting that I hadn't seen before. Just as a sideline, I don't know if we have time for this, but I went shopping the other day, and I noticed that 3 brand name stores that I usually shop at, and I sort of buy presents for my children, and then they always don't like what I buy them, and then they go back on Boxing Day and they exchange them for twice the value of goods. And I found out that all 3 of the stores that I used to shop at now have a return policy that doesn't allow it to go through Christmas. And if it does, if you were to buy a shirt, for example, today at $20, and then you went back on Boxing Day and that shirt was $5, you can't get a $20 credit on the shirt and then buy 4 shirts. You only get a $5 credit, which is what the shirt sells for on Boxing Day. So retailers are starting to price up their Christmas sales, and they're trying to capture as much of that sale as they can without giving it away on Boxing Day. I think that's an interesting phenomenon that's starting to develop.
That is really interesting, Peter, since I do know you look at Black Friday sales and holiday sales overall to gauge how the economy is doing. Now, I'd like to share with you an interesting article I read this morning in MarketWatch. It was an opinion piece regarding the Fed's leading indicators, where the author says he doesn't think inflation and the employment rate should be the leading indicators in the Fed's decision to raise rates. Now, Peter, do you agree with this opinion? And which indicators would you be looking for?
Well, I may agree somewhat on the basis of the employment rate. I think some of the metrics there have changed. With the baby boomers aging, people dropping out of the workforce. That may not be as a significant indicator for the Fed as it maybe was 10 years ago. But I don't agree with the writer on the inflation argument. I think inflation is a very sensitive topic, although all central banks right now are trying to reflate. Inflation is something that has some serious consequences to it, aka 1970s into the early 80s. So I do think that is very, very important for the Fed to watch. I don't see that being an issue in the short term, but I do believe an inflation indicator is certainly something that is important for Fed policy going forward.
All right, Peter, with the time we have left, let's look at the Swiss gold referendum, which is really now around the corner. And when I was in Cayman last week for the Grand Cayman Liberty Forum, the sentiment on the floor was, should the vote pass, this could be a real game changer for gold.
Yeah, I think there'll be a knee-jerk reaction if there is a yes vote on the referendum. I mean, the polls right now suggest that the Swiss will vote no, and I think that would be neutral for the market. If they voted yes and required the Swiss central bank to hold a minimum of 20% of their reserves in gold, yes, I do think psychologically the first impact might be a $20 to $40 pop in the gold price. But bear in mind that this is a process, if they do vote yes, that will take anywhere from 2 to 5 years to complete. So yes, underlying from a demand supply point of view, going over medium to longer term, it's a bullish factor. Short term, there'll be a psychological pop if they vote yes, but it won't impact the dynamics of the short-term gold market. This is a process that's going to take years to accomplish if they go down the road and vote yes.
All right, Peter, thanks so much. That's all the time we have today, and have a very happy Thanksgiving.
I will. Thank you. And I wish all of our American friends a great Thanksgiving and a safe weekend.
And thanks for watching this edition of For Pete's Sake with Peter Hugg. We'd love to hear from you. You can email us at newsfeedback@kitco.com. Thanks for watching.